What time frame should you actually trade? 4? Daily? 1 minute? The truth is, it doesn't matter because the market is fractal, which means the exact same setups repeat on every single time frame. So in this video, I'm going to show you how to trade any time frame using the same simple concepts so you can stop overthinking and start building a system that actually works. To highlight just how similar the charts are, we're going to start on the weekly time frame. The first thing we can see is that the market has pushed into a higher high, so we have a break of structure just here. The second thing to note is that we have an imbalance here. An imbalance is an open price range. When we see this open in the charts, we basically expect these imbalances to be filled, right? Now beneath the imbalance, we've got a demand zone. So this area of consolidation before the large upward move. We're generally going to be considering this red candle, the last candle before the impulse. That is our demand zone. With these three things in line, bullish structure, a demand zone, and an open imbalance, we could safely assume a good setup here would be a pullback to this level and then a buy to target the highs. Now to keep it simplistic, we will target the swing high. This is the next higher high. We're expecting, because the market's in an uptrend, that it will go and clean this high out at some point, which would be our trade target. So for a position here, we could buy with a stop beneath the low, and we could target up into this high. This is a 3.43 risk-reward ratio trade, meaning every $1,000 risked would be $3,430 back. Now remember, we are on the weekly here. This is probably not where you're going to want to trade because these trades will take ages to play out. But you're going to see that the concepts work pretty much the same on all different time frames, even up to the weekly. So when we're trading these price action concepts, we see they work on pretty much every single time frame simply because we're following just pure price action. We're not looking at any indicators or any additions or overlays. We are reading the true price. So if the price structure is bullish, if we have imbalances and we have demand zones, then nothing matters really about the time frame. This could be the weekly, could be the 1 minute, could be the 5 minute. It truly does not matter. So let's jump this forward through to the target. There, as you've just seen, the trade there, keep this in mind because you're going to see a very similar thing in a moment on those lower time frames as well. When you trade with price action concepts like market structure, supply and demand, and imbalances, you can trade this on pretty much any time frame. Now take a note of this setup because this is what we're going to be looking at across multiple different time frames, just to highlight to you how similar every different time frame is and how this fractal nature of the market, meaning the same patterns repeat on every time frame, is 100% viable. So we're going to be looking for a break of structure into higher highs and then a pullback through an imbalanced range to retest the demand. Our target's going to be simple. We're just going to target the previous higher high. Now I'll show you all these different time frames so you can see what I'm trying to show you. So now we're on a daily time frame. For this one, we're not even looking at a currency pair. We're looking at the US dollar index, which is an index that shows the strength of the US dollar against a basket of different currencies. Now we can see, once again, we've had a break of structure to the highs. We have an imbalance here in the form of a gap, and this small price range just beneath these lows. And beneath that, we have a demand zone, which we're going to use as the last candle before the impulse, right? So we have some imbalance previously, but because this area really kicked off this drive to the upside, this is going to be the point that we would focus on for buys. So now what do we have? We have imbalance, we have demand, and we have a break of structure leading into new highs. So much like what we saw on the weekly on a currency pair, we can see the exact same price formations here on the daily on an index. So it's a completely different asset class, really, but it still works in the same way, which is true for all of the concepts that I trade and teach. You can trade these on futures, equities, cryptos, currencies, indices, whatever you want. Now this trade setup we will follow the exact same format. We will target the high once again. So our buy is going to be on the demand. Stop loss will be beneath the low. I'd put it beneath the low generally here. That makes the trade safer. Targets wise, we're pushing up towards the highs. This is a 3.78 reward to risk profile, meaning every $1,000 risked is $3,780 in return. Now, allowing this trade to play out, you see very quickly we get a tap into demand and a continuation through to the highs. So you see exactly the same thing that we just viewed on the weekly happening here on the daily. The return is about the same. This trade would be held for less time. This is more like something you would take as a swing trader, but of course we can still go lower. Now we're viewing a 4-hour time frame. So we've stepped down once again. We can see break of structure, higher high. We have an imbalance left open in price, which is this open price range here. And beneath that, what do we have? We have a demand zone just here. So you can already understand what we're going to be doing here. We're going to be targeting the next higher high and buying from demand. Exactly the same concepts and exactly the same trade format as what we've already seen here on the weekly and on the daily. But the 4 is going to work just as well. So here we get our trade into the zone. Then we get a fill of our target. Now this is getting more like what a general trader is going to do. This is a much faster trade. We're in this trade for just a few days, and then it's completed the target. And this one is a 6.96 reward to risk profile, meaning $6,960 in return for every $1,000 risked. The exact same concept once again. Now we're going to a bit more of an extreme. We are looking now at a 5-minute time frame. So we've jumped down a lot. First, we can identify that the structure is starting to shift here. We've had a big push up here, forming a higher high. Then we left open an imbalance at this price area here, this open price range. And beneath that, we have a demand, just as we did on the weekly, just as we did on the daily, just as we did on the 4-hour. Now our demand for reference is going to be this small candle here, the last candle before the impulse. We want to cover the wick, so I would mark the demand just here. Targets wise, we're just going to target the high once again. So we would look at a position that looks something like this. We're looking for an imbalance fill, and then we're looking for a retest of demand to then lead us through into a new high in this upward trend. So allowing this trade to play out, you see very much like we did on the weekly, the daily, and the 4-hour, we get the exact same format, the exact same setup, break in structure, retest of imbalanced demand, trade towards a new high. It's all the same. It doesn't matter if you're trading high time frames or the very lowest. And for the final highlight of just how similar different time frames are, I've gone all the way down to the 1-minute time frame. Now I highly suggest you don't go trade in the 1-minute time frame because there's a lot of mess, a lot of chaos. The markets move so fast that you're going to get yourself caught in a lot of losses. But I just want to show you that structure can still be exactly the same. We have a market here that is forming higher highs and higher lows. We are seeing a strong market, a bullish market. We also have in this bullish market an imbalance. And beneath the imbalance, we have a demand zone, right? Exactly the same format as every trade so far. So realistically, if the markets are the same, we should be able to buy from here with the stop under the low, targeting this high, the next structural high. Now the risk reward for this one's only going to be 2.85. So it's just under 3. So it's not really a trade I would look to take. Plus the fact it's on the 1-minute time frame, by the way. But I just want to highlight just how similar these markets are. So you see there, we get a tap into demand after filling the imbalance, and the market drives up to retest that structural high. So it is around a 3-hour trade. It's something we would potentially take if it wasn't on such a low time frame. So there you have it. There's really nothing stopping you from trading the time frames that you want to trade. The markets are fractal, so every chart is going to provide similar opportunities. Whether it's the weekly, the daily, the 4, the 1, the 5 minute, the 1 minute, whatever, it doesn't matter. You can trade flexibly as long as you're using price action and structure focused concepts, like the way of trading that I've showed you in today's video. So keep that in mind next time you're doing some backtesting. And don't worry yourself too much on what time frames you should be using, because now you know they all can work. Now you won't just be able to instantly succeed with this new knowledge. You do need to build a successful working trading system. So if you found this video helpful, but are sick of losing money, being emotional, or second guessing your trades, and want help with your trading, then click the link in the description below for your free strategy call. I help busy professionals and entrepreneurs be profitable traders in less than 4 hours a week using my proven market edge system.